These are the top 5 mistakes that will ruin your credit score. Building your credit score is hands down one of the most important things that you need to do to improve your financial future. If you don't work on these things and continue to grow your credit score, you're going to suffer over your lifetime paying astronomical interest fees. Interest rates are at an all-time high right now, even if you have good credit. So imagine if you come in with bad credit, it's gonna be even worse. So maintaining a high credit score is super important. So in today's episode, I'm gonna go over the top 5 mistakes that will literally ruin your credit score and how to avoid them. You wanna make sure you watch this to the end because every single one of them are super important. Welcome back to the channel. I'm Mike the Credit Guy. I'm the owner and founder of Limitless Culture. We created the most advanced DIY credit management system in the industry. Our system allows you to take control of your credit, creating custom Metro 2 attack letters every single round, never using templates, for only $55.99 a month. Link is always going to be in the description. Now let's get into this video. Number 5 is a huge one. I look at over 60 credit reports a day. That's insane, right? And the biggest thing that I see on credit reports is people start to get a good credit score. They start to climb above a 680, then they hit a 700, then they start applying for more credit. Oh, I need a new car, bro. Oh, I need these credit cards. I need it. No, you don't need anything unless it's an actual real emergency and your car's broke down. Of course, you have to go get another car. But one of the biggest things I see is people get trigger happy and they believe that they have to have a lot of credit cards. They believe that they have to have a bunch of items on their credit report. And no, what you need to do is use your credit and build upon it and let it grow. It's the old saying of you have to plant the seed, you have to water it, and then you have to get in the garden and you have to let it grow. But if you keep putting seeds and keep adding water and keep, well, what's gonna happen? You're gonna oversaturate your credit profile, just like a plant. You keep putting more seeds in it and you keep adding too much water, it's oversaturated. You don't need to have a lot of credit to be successful with credit. This is one of the biggest common mistakes that we see. People that are in the 800 credit scores literally have only maybe 3 to 5 credit cards, an auto loan, and a mortgage loan, and that's it. So when you let your credit score grow, you're letting your age of credit rise. And this is truly how you get to the 800 club. And people just don't understand that because every time you add a new line of credit, whether it be an auto loan, an installment loan, a credit card, any new line of credit, you're reducing your average age of credit. Age of credit makes up 15% of your credit score. So it's not super high impact, but it really makes a difference over time. So be very, very picky and wise when you choose any types of new credit products that you're going to add to your credit profile. Number 4 is super tricky because it actually contradicts number 5. Number 4 is mix of credit. Not having a good mix of credit can actually hinder you as you continue to grow your credit profile. A great example, if you're trying to purchase an actual car and you want to get it financed and then you've never had an auto loan on your credit report, you can literally have a 750 or a 760 and the actual finance company or the bank will decline you because you've never shown that you have actually managed an actual auto loan on your credit profile. Or people say, well, how do I go from a Toyota Camry all the way up to a Porsche? If you've never shown that you can manage and pay for cars on time, auto lenders will not actually let you get to the Porsche. You have to incrementally actually increase it. So I did a $25,000 loan here, and then later on I did a $50,000, and then I did an $80,000. Increasing them incrementally because you have a good mix of credit with auto loans will help you over time. But it also matters with credit cards. You want to have the right credit cards on your credit profile. And people always ask me, well, what are the right credit cards? You want the 5 biggest banks on your credit profile. That's American Express, Citibank, Chase, Capital One, and Discover. Those are the 5 biggest banks that you want on your credit profile. And this is why I say, don't get Credit Ones, don't get First Premiers, and my favorite, the horrible, don't get an Open Sky. We want the biggest banks and to build our credit profile properly. And like I said earlier before, having this mix is a big deal because people that are in the actual 800 credit score range, they have a very, very built out credit profile. They only have 3 to 5 credit cards an auto loan, and then some type of other installment loan or mortgage loan. Being with your actual credit union, if you don't have any installment loans, you can do a secured loan to show that you can pay things over time. That's great. That'll help you build your credit profile out properly. Last part is the most important. Number 3 is a huge one. Not hitting the like button will destroy your credit score. Now, I'm just kidding, but you need to make sure that you smash that like button and you hit the subscribe button, because we're trying to get this channel to 1 million subscribers and we cannot do it without you. But the real number 3 is a huge one. Not using your credit cards. Not using your credit cards can really damage your credit profile. And the reason being, a credit card company or a bank will shut the card off if you don't use it enough. And a lot of people complain about this and they say, this isn't right. They don't have the right to do it. Well, actually they do. If you're not using a credit card company will generally shut it down after 2 months, sometimes 3. If you've built a really good relationship with them, a lot of times they won't even touch it. But I have heard people and seen people in the comments or my clients get really upset because the bank closed their credit card. And when you close a credit card, it has an even more negative adverse effect on your credit profile, because you're going to lose the age and you're going to lose the available credit. So you need to make sure that you put all of your cards on some type of auto payment system, some type of subscription like Netflix, Hulu, Prime, whatever it may be. Even if it's just paying something for $5.99 a month and you pay it off in full, keeping the credit card active so it never gets closed and you don't have to worry about dropping your credit score. Number 2 is one of the biggest credit myths and biggest problems we see in the finance space. People that have been in the credit card world for over 10 years can't get this right. Carrying balances on your credit profile hurts your credit score, because utilization, which is balances owed, is going to make 30% of your credit score. That is super high impact. And a lot of people get this confused and they say, you can't use more than 30% of your available credit. It does not matter how much of your credit you use. So stop saying that on social media, please. What matters is the balances that report. Controlling these balances can control 30% of your credit score, and you are taking the control back into yourself, and you're actually learning what's making your credit score go up and what's making your credit score go down. It's just a big seesaw. But understanding keeping your utilization below 9% is the sweet spot. It is a good place to keep your actual credit profile at. But the target goal is always going to be 0 to 6%. So let me show you exactly. This is directly from FICO, the people that help calculate your credit score. I'm gonna put it up on the screen here so we can see it. In the little red box, you can clearly see it says outstanding debt. It does not say usage. So when people say you can't use more than, they're full of it, okay? So I don't have to say that on this video. They are absolutely full of it and they don't know what they're talking about. So it's outstanding debt. Let's pay attention to the first 3 boxes. So if you have no revolving trades, you're gonna get only 30 points. These are the points that you can actually get. Now, if you carry 0% utilization, meaning you don't have any outstanding debt with your credit cards, you get 55 points, making sure that you pay off in full every month and it reports 0%. Carrying 1 to 6% is going to get you 65 points. There's only a 10-point difference. Now you see the little asterisks on there? That means if you've already received some of those points or all those points previously, you may not get any extra points. So all these people out there saying, if you carry a balance, it's gonna help build your credit score, they're also full of it, because you could have already got those points, or you may get those points, you won't know, because everyone's credit profile is different. I hope this gives everyone a lot of clarity, but also look at 20 to 49%. You're going to only get 45 points. You're going to lose a lot of points once you start to accrue more credit card debt, and that credit card debt rises and your credit score drops. The number one thing that will destroy your credit score is late payments. One late payment can drop your credit score 60 to 120 points. Now I'm talking about FICO. Don't come for me in the comments saying, oh, but my Credit Karma score said this. Nobody looks at your Credit Karma score. So let's go and just stop that nonsense. One late payment does super big damage. If you're trying to purchase a home, a lender does not want to see any late payments in the recent 48 months. If you have any late payments in the recent 24 months, that's an automatic denial. Now, don't come for me in the comments when I say that, because some people say, nah, you know, the mortgage lender is going to approve me. I just got to pay down this debt. Yeah, because they're going to get you with that high interest rate. When everything settles out and the interest rates go back to a decent place, lenders will not accept you if you have recent late payments. That's just how it is, because you are not showing that you pay on time. You need to keep that streak alive for the rest of your life and always paying on time. Because those words, paying on time or paid as agreed, are the most powerful things on your credit report. Payment history makes up 35% of your credit score. So this is why it's super high impact. And I want to show you this graph of how you become a high risk borrower. This is again directly from FICO. As you can see, in the first 11 to 12 months, you're a high risk. You're deemed high risk by any lender, and this will get you automatically declined if you have late payments. And as you can see in the graph, it starts to lose its weight once it hits almost 5 years. That's crazy. It takes your credit score literally 6 years to heal from a late payment. This is why it's important to always make sure that all of your accounts are set to auto payment, to automatically draft from your checking account, not your debit card, but your checking account. And if you have any late payments, you want to dispute them first before sending a letter of forgiveness, because you're sending a letter and asking for forgiveness, and you're basically telling on yourself. You want to attack it first using Metro 2 compliance attacks. We do that. We have an amazing DIY program, but it's very important that you try to reverse these late payments if it's possible, because a late payment is one of the biggest nightmares and hardest things to reverse. I also made a video about that, so you need to go watch that video on how to actually fix or remove late payments. I hope you enjoyed this video. If there's anything else specific you want me to talk about, drop it in the comment section, because it's all about you, our community. We cannot do it without you, so we cannot thank you enough. So thank you for watching. Make sure that you watch that next video, because that is all about late payments. And don't forget, subscribe to increase your credit score.